it's Ty with Credit Suite with a quick business credit and funding tip on your secret little known about bank credit score. So you actually have three types of credit as a business owner. You have bank credit, consumer credit, and business credit. Bank credit is a credit score that big banks use to determine how much money you should get out of the banking system. And here's how it works. It ranges from a low 4 to a high 5 level, and it's typically based on how much money on average you keep in your business bank account over a 90-day time period. To become lendable, you need to have at least a low 5 rating, which means you need to have at least $10,000 on average in your bank account over the last 90 days. Now, there are other factors that affect your bank rating as well. The number of non-sufficient funds you have, that you have more money coming in the bank account than going out, the consistency of your deposits, how long you've had the bank account for, even other bank accounts that you have with that same institution. So make sure you keep an eye on your bank rating to have the best chance of getting approved for credit and financing. And for more tips on building business credit financing, visit us online at creditsuite.com.